Hello dear traders, today is Tuesday, July 27th, and you are watching a market review that I prepared for InstaForex. The overall trend now is in consolidation of the US dollar related trading instruments. I mean the US dollar, gold and others. Tomorrow the Federal Reserve is due to unveil its policy decisions that will be accompanied by higher volatility. Meanwhile, nobody wants to open any positions with uncertain risks. The S&P 500 is still printing higher highs, to the joy of American investors but to the disappointment of Russian ones. Upbeat financial records of top US companies are the catalyst for the rally of the S&P 500. American companies are making nice corporate earnings and bring investors good returns. Do you know great news about Bitcoin? It has eventually wrecked the bearish trend and at least secured its price above the milestone level of $30,000. Now let's discuss my trading ideas on the chart. Gold comes first. This instrument is drifting lower. I understand a sense of frustration among traders because gold is unable to develop any clear trends, neither up nor down. I'm pleased about this market because gold is in the consolidation phase. It enables traders to curb their losses by means of clear-cut extremes that will be used by most market participants to place stop-loss orders. I'd like to tell those who are watching my video for the first time that I practice technical analysis complemented by my own method called hunting for stop orders. In essence, my strategy is to identify levels where most traders set stop losses. What I do is I place take profit orders at those levels. How do I differ from other traders who apply common trading strategies? With my method, I understand perfectly well from whom I take money in the market. I'd like you to realize that. What can I advise you on gold? Nothing for a while, because all eyes are on the Fed policy update. I'm not a kamikaze to open any positions before this crucial event. Meanwhile, this situation is uncertain for me. I understand that gold is set to decline in the medium term in the course of a three-wave structure. On the other hand, I see that some indicators like stochastics are showing a slowdown, those confusing traders. I guess that such indicators could be signaling a trend reversal soon, so the gold price could turn upward for a brief time. As for me, I'm anticipating the Fed statements. I want to check if gold is going to move in a three-way structure or will be able to target these highs which are yet to be reached. Meanwhile, I don't understand it for sure. Recently, we hunted for this instrument and managed to catch some good moves. Let's wait for the Fed's event and find out some fundamental factors to build our strategy. We'll see how three-wave will unfold. As for silver, there are also two options. I understand the three-wave structure that happened earlier this month. I see that traders want to buy silver at lower prices. If silver tumbles below the level of $20, I will invest in this instrument. I will buy at about 20, stop loss will be behind 0 and the take profit will be above 40. Why not? It will be a nice investment idea for a 1-hour term. Apart from its jewelry merits, silver has high technological merits, so demand for silver is set to grow, which makes it more interesting than gold. In fact, demand for gold is based on speculative interest. What is special about the euro-dollar pair is that the euro is now sitting at about 1-year low. You see, the euro hit a 1-year low of 1.17 in late March. Now the pair is creeping to this level. Besides, we can see 1.16. 100 pips down that used to support back in 2020 when the pair was growing. In March 2021, the pair missed 100 pips to drop to this level. Now it's declining there slowly but surely. I assume that such price dips could end up with a fake breakout at least. Commonly, when an asset's price falls to such 1-year lows a few times, traders open long positions and place stop losses below these levels. It seems to have logic. Let's imagine you are a beginner and your financial advisor recommends that you should convert your dollars into euros. In this case, it will be convenient to limit risk by 1.16 and 1.17. There are no other options. If you buy the euro now, where will you place stop orders for a medium-term strategy? You won't place it deeply, as it will be too expensive and too distant. We clearly see extremes on a daily and a weekly chart. A lot of technical analysts would recommend their clients to the same, to limit risks by clear-cut extremes. This is a classic approach. When I see such traps, I do the opposite. I recommend my subscribers avoid such obvious traps. I believe that if the price comes a few times to a clearly visible level, this level will be broken sooner or later. It will be either a fake or true breakout. I mean that if you are hide your risks there, you won't be able to use it, so I urge you to be cautious. Another thing, on a 4-hour chart, there is a clear level 1.1754. Last week the euro-dollar pair touched it twice. Now the price is coming to it again ahead of the Fed statements. Someone thinks it's a great idea to buy the pair right now at extreme lows. There are setting stop losses below 1.1754 and below 1.17. That's a 1-year low. I assume their stop orders could be triggered, those bringing them losses. Hence, I warn you against opening any long positions now. Please make sure you avoid traps. The pound sterling. I have the bullish scenario for a week ahead. I want to see how the pin bar will prove itself this week. Let me remind you that this currency pair depends not only on Boris Johnson and Queen Elizabeth, but also on the US dollar, which serves as a quoted currency. Tomorrow there will be a lot of news on the dollar's front and higher volatility, so you should be careful if the US dollar picks up. The currency pair will make a correction from that pin bar, and we will be able to open long positions betting on further pound strength as high as 1.44. That's all for today. The highlight of the week is the Fed's policy decisions that will be announced tomorrow evening. Meanwhile, I wouldn't open any large positions with close stop losses. Some instruments such as the OCD-CAD pair and the NSD-CAD pair could be traded using a grid. Manage your risks and take care. Goodbye.